Recording in progress. Okay.
Hey everyone, and welcome back to the show today. I'm so thrilled to announce our guest for the day, Dr. Adam Gower. Adam, thank you so much for being here.
Such a pleasure to be here. Thanks so much. I've been looking forward to meeting you for so long. Thank you, Suja.
I have been as well, Adam. Thank you so much. So Adam Gower is a seasoned real estate professional with over 30 years of finance and investment experience who today builds digital marketing systems for real estate professionals who want to find more investors so they can raise money. And he has taught over 4,000 individuals how to build wealth, preserve capital, and earn passive income from investing in real estate. Well, Dr. Adam Gower is definitely a veteran in the industry and someone that I'm super excited to hear from today. So Adam, why don't you start us off with telling us how and why you got into real estate?
How and why I got into real estate. Oh my goodness, yes. It's a good job we didn't prepare. You really wanted to, because I totally misunderstood your question. Now I do understand how and why I got into real estate. How much time do we have? This now is absolutely my favorite topic, me. Right? So I could talk for hours. All right, I'm going to give you the short story though, because I know we don't have a lot of time. I actually got into real estate. How did I get it? I got into real estate because I used to, well, first of all, my family was in real estate in England. But apart from that, when I came to the United States, I used to knock on doors and say to people, I will do anything for $5 an hour. Right? And some people, they'd look at me, anything. But so one guy who lived really close by said, yeah, he said, will you dig a ditch for me? You do labor. Will you do laboring? I said, right. Yes.
Classic first job.
Perfect. So I started laboring, and he's an electrician. And so I then kind of advanced, I got a promotion. So instead of digging holes in the ground, he had me crawling under basements and in attics, pulling wires. And then very quickly after that, it was a big jump, obviously, but I got a job with a small M&A company, mergers and acquisitions, and I sold them on the idea of raising money. They were raising money in Japan for mergers and acquisitions. I suggested they look at real estate. This is a very long time ago. And so they said yes. And so I ended up raising a lot of money for real estate development in the 1980s in Southern California. That's how I started.
Okay, awesome. So how did you get that idea, like to pitch to them?
Oh, because so I don't want to be pulling wires forever. I actually wanted to get into venture capital. And so I went over to this little boutique M&A shop. And one of a family friend actually ran a development company. I used to have breakfast with him, real estate development. I understood real estate. But I hadn't, I was very young. I was just, early 20s. I mean, basically at university doing summer work. And yeah, so this friend of mine who was a developer was telling me about the returns they were getting and explaining how they financed their deals. And I showed me a pro forma and it made total sense to me. So I went back to this little M&A shop and I say, hey, look, guys, why we're trying to find companies to buy. But I've got a friend who's doing these great deals all over the place, multifamily ground up deals. Why don't you take a look at these? Because everybody, all your clients, all your Japanese clients, they want real estate. And I know a guy that's big into that. So they said yes. And we switched, the entire firm actually refocused, stopped looking at M&A and started investing in real estate deals. So it was because of who I knew that it actually really pivoted quickly.
Yeah, for sure. That's pretty powerful, for the firm to just basically completely switch directions. Can you speak to just what was, so appealing about those real estate deals compared to what they were doing previously?
Gosh, well, that's so long ago now. We're really talking mid-1980s. I don't even like to think about how long ago that is. To be honest with you, I think because there was such a wave of enthusiasm so the investors at that time that I was dealing with were all Japanese nationals. And there was just a huge wave of interest from Japan in US real estate. I will tell you one quick anecdotal story. I know we've not got much time, but I remember sitting at one meeting, and there were 5 investors had flown out from Japan, and my job was to pitch. So I was put up in the, I don't know why they picked me, but I used to stand up and I would explain the deal. I'd go through the whole presentation, right? What I call the dog and pony show, which is what we do today, but we make it a lot easier and more efficiently. So I would do that, and I'd stand up and go through the presentation. And we'd spent weeks preparing for this. It was like huge, deep-pocketed investors, right? Ultra high net worth, all of them. We've got to make it work. And I showed them a pro forma. And on the pro forma, this was in mid-1980s, the cost of the land that we were buying was actually in downtown San Diego, was $50 a foot. We were buying at $50 a foot. And suddenly there was a translator. I didn't speak Japanese in those days, and they didn't speak English. So suddenly there was, the interpreter was asked a question. Everybody started muttering. And he said to me, he said, "Adam, you made a mistake." Of course, I went into an instant cold sweat. He said, like total panic that I'm getting it all wrong. He said, "Yeah, you've got a 50.00. There shouldn't be a dot there." And I thought, what, for the land? He said, "Yes, you made a mistake in your calculations." So just starting to panic, I wasn't sure. And we kind of looked at it again and realized, no, actually, those are right. And I said, "No, that's actually right." And he told them all in Japanese that we were paying $50 a foot for the land, not 5,000. And they all just sat back and said, "Okay, we're in." You'd like, "All right, fine, finish up. But if that's all it costs for the land, you don't need to say anything else."
Right.
That was it. And so it was like falling off a log in those days. It wasn't, because it was a little bit more complicated, but it was an extraordinary experience. That's a long time ago.
Yeah, for sure. Totally. And that's actually brings me to another question, which is like, you've been doing this longer than anybody else I personally know. So
I look a lot younger though, don't I?
Well, you just said the mid-80s, which is the only reason I would have thought that. But in any case, so I mean, I want to hear some of the basically stories of where things didn't go correctly, or as lessons learned along the way. I mean, like, what have you learned that you now are bringing forward into the future?
Very good question, and a very, very important question. Simple fact: what goes up does come down, period. The market will turn. We just went through COVID, right? Basically come out the other end of that. Some asset classes were hit harder than others. Multifamily survived pretty well. There were some issues, there's all kinds of asset classes that had different experience, but there is always a time when absolutely everything goes down, period. And it happens on a macroeconomic scale. And if you are not prepared for that, you will lose everything. You can lose more than everything. So, for example, if you guarantee debt, people will come after you for that. So you can lose all your equity and still owe the debt. Bankruptcies will happen. That is the biggest lesson. That's what happened in the late 1980s. This whole party came to an end when the savings and loan crisis hit. Everybody was saying it, this time's different. It's because, and everyone tries to rationalize that it's different and it's okay to take these outsized risks. But the fact is that if you do that and you don't have the experience of a true downturn, you will lose everything. Simple as that. And all your investors will as well. It gets ugly.
Yeah, for sure. That's a good point. I mean, I actually did not personally see it, but know of like one of those situations where someone guaranteed debt and everything fell to pieces when COVID hit. It's anyway. So do you consider COVID a true downturn? And if not, then, I mean, I know no one has a crystal ball, but do you have any thoughts about what's coming next and how to prepare for it?
Yeah, so COVID was interesting, actually. It was no, it wasn't really a true downturn. There are some very small pockets here and there of what's called distressed opportunities, but not so much. I'm working on a few now, but it's not anything remotely close to the global financial crisis
For sure.
of 10 years ago, 12 years ago. This is what I think is going to happen now. There's massive. First of all, there's a vaccine, which puts COVID really in the rearview mirror, particularly in the US.
Mm-hmm.
Another massive financial stimulus package, trillions of dollars being pumped into the economy, incredibly low interest rates.
Mm-hmm.
And people have been sitting at home for a year with money burning holes in their pockets. So I think that what's going to happen over the next 2-3 years at least is going to be huge growth. I think you're going to see enormous amounts of liquidity. Prices are going to inflate. You will see inflation. There's all kinds of arguments why there won't be inflation, etc. But there's already incredible pressure, upward pressure on real estate, commercial real estate values because of the liquidity that's in the market. That's just going to keep on going up. Then we will hit a wall. So you just got to be sure you're not the last person standing when that happens. So, and it will. And I think that this next one, it really could be a huge upsetting downturn. There's too much liquidity in the market, too much money now. And that only leads ultimately to asset price bubbles, and those always pop.
Yeah, for sure. Yeah, it makes a lot of sense. I mean, and also it's just been such a long time that the market's been growing, and then of course it just didn't really go down. I mean, obviously certain asset classes and businesses were hit harder, but in general, everything's just been going up since COVID. So what would you, when you say you don't want to be the last one standing, would you, I mean, obviously this isn't advice or anything, but like, would you think to like exit like within 2 to 3 years? I mean, obviously every asset class is different.
So it's almost impossible to time the market. There are some geniuses that do time it. Dick Ziman is one at Rexford Industrial. He's a genius. I don't know how he does it. But for the most part, mortals like thee and me, you can't time the market. The way to mitigate the impact of a downturn is to not take on too much debt and to underwrite very conservatively. And the best way to underwrite conservatively is to look to see how deep any particular market fell last time and assume that that is what will happen, and then underwrite to to be able to survive a downturn if it were to drop again by the same amount. So that simply stated means don't take on too much debt. Be very, very conscious of how much debt you have, because that's the killer. The bank will always come after you, will always try and foreclose because they have to. They have no choice. They are regulated and mandated to do certain things, and one of those is to foreclose. So if you've got too much debt, doesn't matter how good your relationship is, they will come after you and foreclose.
For sure. It makes so much sense. It's something that I definitely focus on a lot too in my underwriting, is the debt is the thing that will make you lose millions, right? And so while we love leverage in real estate for obvious reasons, like helps us grow our profits faster, we also don't want to be over leveraged by any stretch of the imagination. So
the other thing also, Suja, is to have an eye on the future, long term.
Yeah.
If you're thinking, like you talk about, should we sell in 2 or 3 years? No, you should be planning to hold forever.
Yeah.
Really, just if you can hold forever, that's really where patient money in real estate is. The ultra wealthy in real estate, the ones that have owned it for decades or multiple generations. So if you think in those terms and have patience, you'll look back and be happy that you employed those strategies.
Yeah, that's, I think, an interesting point, because I have seen, multiple camps on this. Like there's some folks who they want to exit and sell so that they can, roll that into a new property and start the cost segregation depreciation all over. Can you just explain more why you're in the other camp of buy and hold forever?
Well, there's always friction, first of all, when you do a 1031 exchange, which is what you're discussing or you're describing. there's always cost friction. So you have to make up that. And because, look, there's all kinds of strategies for investing, but in my network, people who have the greatest wealth are those who have patient money and who are happy to sit on income that is growing year in, year out on existing assets, maintain them, keep low debt, and secure themselves against the possibility of a downturn. Yeah, you can 1031 and et cetera, and keep on moving. But people that buy and hold forever, those are the people that pass it on to the next generation and who have the staying power.
Mm-hmm, for sure. And then but what about in terms of keeping low debt? Do those folks, in your experience, are you seeing them like do the cash out refis to capture some of that equity that they've developed?
Yeah, no, really just try to keep debt low instead of taking on more debt, which is what you talk about, cash out equity.
Yeah.
In some cases, it depends how much value is added. You know, we have a client at the moment who likes to add value and then refinance to take out investors and leave no money in the deal and just continue to be collecting rents from the refinance, but with no risk now because you have no capital left in it.
Right.
And that's a nice thing. But their objective is to hold forever.
Yeah.
Their idea is to get the equity out in order to invest somewhere else.
Right.
But still to hold the assets forever. So they will not over lever.
Yes. Okay. Yeah, makes sense. So, over your long career, does one of your least favorite deals come to mind?
Oh, least favorite.
And then we can go to most favorite after that, or you can choose.
What about least favorite? But a deal that that I'm glad I didn't get into.
Sure.
The best time to get out of a bad deal. You know when the best time to get out of a bad deal is?
Before you get in.
Correct. So I looked at a property. It was on North Figueroa Boulevard, I think, Boulevard Street, maybe, I don't know, in LA. It's years ago. And I remember going to this place and it was condemned by the city. The city wanted me to help find the owner, who was a vagrant who had inherited it. It was a wacky story. And it was a nice location. It was a good location for multifamily development, but it had a couple of derelict buildings. It was overgrown. It was a total disaster, but looked like a good opportunity. So I met the guy, found him, met him, and he told me a story. He told me that he was an old fellow. He was indigent. He was like, he wasn't homeless. He didn't, I don't know, lived on the street. What can I say? Very wealthy, owned property, but he was a bit loopy.
Yeah.
And he told me this story. He said when he was growing up, and I forget when it was, I want to say the 1920s or something. It was a long time ago. He was an old fella. Whenever it was, he told me, he gave me dates. He said his father had a dry cleaning business there. And then they would fill it with this chemical they would use to wash the clothes. And a big truck had come along, empty the chemicals, and then refill it sporadically, right? Or not sporadically, occasionally. But the machines had a leak, he said. And so his father, this fellow's father, used to keep a metal bucket underneath the machine to catch all the chemicals that fell through. And once in a while, when the bucket filled up, his father said, go get rid of this in the backyard. And he said he'd take this thing out there and he'd pour it onto the soil. He used to enjoy it as a kid, watching it kind of disappear into the soil.
Yeah.
I did what's called a phase 2 investment. Phase 1 is just document. Phase 2 is where you drill holes. We drilled holes, and I don't know, it went down really deep. They pulled these core samples out, these soil samples out, opened up the core, and all of us standing there just got hit by the waft of these chemicals. Like, whoa, like sniffing glue, just hit it. And they did an analysis, and these chemicals over the years had percolated down, hit the water table, and created this massive plume of toxic waste for all the way down the block. I mean, it was just a huge mess, basically. So it was a lucky break that I met this guy and decided to do a phase 2 investigation. Excuse me, sorry. Phase 2 investigation. So that is one of the most important aspects of any real estate. You talked about due diligence before we started recording.
Yeah.
Do you do diligence? You absolutely positively have to know what the environment is like, or environmental conditions are in the dirt under your property, because if you buy something that has environmental issues, that can wipe you out as well. It's a total disaster. So it's a very important lesson I learned.
For sure. I mean, that's a good point. We don't actually really do a lot of I don't see a lot of environmental assessments being done in the multifamily space.
The first thing you do is a phase 1, which is documentation. And a phase 1 will show you if there's been the history of the site. Has there been a gas station or a dry cleaners or something else on the site? If it turns up something like that's existed, then you go to a phase 2. And it used to be that the state would actually pay for those phase 2s. It's quite interesting because they want to figure out what's out there. So they paid for this kind of when I did this study. But it is something to look at. Another thing to look at that's very important is taxes. You ought to be sure that you have assessed the possible reassessment of taxes when you buy an asset, because that's typically your biggest line item, cost line item. Apart from debt, is going to be your taxes.
Definitely.
So you want to be absolutely sure before you get into a deal that there isn't going to be some kind of other assessment or of some sort that could wipe you out as soon as you buy it and get a new bill.
Yeah, for sure. Makes sense. Well, I'm glad you did that phase 2. Did you skip directly to phase 2, or did you do it phase 1? But you already knew
phase 1, because you need to know.
Okay.
Yeah, and then we went to a phase 2 in that case. Yeah.
Okay, but in that case, the phase 1 would have said that there was a dry cleaner there before, right?
In this case, it did. Yeah.
Okay.
And also, I spoke to this guy.
Yeah. Right. Totally. Well, yeah, that is dry cleaners on sites is, I think, notorious for creating tremendous environmental issues for folks. So definitely some good, important things there. So what, you've been doing this for a long time, Adam, what sorts of, I mean, obviously I'm sure you could and have written like books about this, but what sorts of advice would you give to passive investors who are maybe a little bit newer to the space?
I would say that you should take your time and learn the business. It's not that difficult. There is a lot of information now, vastly more than there has been historically. Historically, you would have to buy a university textbook that explains real estate investing, and those are academic. They're not the real world.
Yeah.
But since the advent of crowdfunding, now there's just enormous amounts of information. So if you're considering investing with a sponsor specifically, I would advise look and see how are they educating you, right? Are they transparent? Are they explaining their point of view? Are they producing content that you can consume to understand how they think, how they invest, what their philosophy is, what their investment thesis is, et cetera, and really dive into that. Look, think about it this way. If you buy, I like using this example. My wife just recently asked me to buy a new vacuum cleaner. All right, fine. So I spent an hour researching the damn thing, right? So I go online, I pay for Consumer Reports at $20 to get their thing. I look at reviews, I go on Amazon, I look at websites, and an hour later, I figured out what I'm going to buy with this $300, $400.
Yeah.
Well, if you're an investor spending $25,000 minimum, writing a check for $25,000, not $300 on an appliance, a simple appliance.
Yeah.
You should be doing research. You want to get deep into who it is that you're spending money with. So you want them to be transparent. You want them to be providing you with the information that you need to understand who they are and whether or not they're credible. And if they don't, if they've got a website that is nothing more than some nice pictures and a contact phone number, yeah, you can figure them out, but there's so many out there that are so open, so detailed, and so transparent. Why? Before, you could never do that. You wouldn't. The only way you could invest in real estate was if you knew somebody personally, and they actually invited you. That was the only way you could get in. Now you can go online and find 100 really good sponsors who are open and descriptive about what they're doing and want to educate you. Go and invest with one of those.
Yeah, for sure. Yeah, it makes a lot of sense to really, take the time to do your own due diligence as an investor and know who you're investing with.
Exactly.
Yeah, for sure. So now, tell us about one of your favorite deals. I mean, I know it's probably hard to choose, but is there any one that stands out that you're like, oh, that was a great deal?
Yeah, the ones that I've kept the longest. They are, they're today. I look back and I think, goodness me, I look at the amount of equity I have in these relative to the value. It's tiny. Relative, the amount of money I put in relative to the value, and the amount of cash flow that comes off them is incredible. So yeah, I think looking back, I wouldn't have sold anything. I would have tried to keep everything. Yeah.
Okay. Yeah. I
Those are the best deals, the ones that you hold the longest.
For sure.
IMO.
Yeah, for sure. I mean, I think that's really valuable. And what would you say, Adam, just drives you to keep going in this business? Like, what really juices you and gets you excited about doing this every day?
I actually like the variety of deals and of people that I deal with, right? So I work with investors, I help investors, and I also help sponsors to raise money. Everybody's different. Everyone has a different perspective. The sponsors we work with are industry leading, and they span every asset class, from industrial to self-storage to multifamily to skyrise offices. We're working with a bank at the moment on some non-performing assets. And I learn so much from these guys all the time. I understand, because what we do is we extract from them their insights into how they have become world experts. And so I spend a lot of time talking to them, and sitting on the foundation of my knowledge already, it's easy. I just learn a lot. I find the variety is interesting, and the people I talk to, I love helping people, and I love learning from them as well.
For sure. Yeah, it makes a lot of sense. I mean, I think I was attracted to real estate early on because of just that, the types of people that tend to, the very dynamic individuals that have really studied their craft and are just making a lot of things happen. It's a very exciting space to be in. There's a ton of variety every single day if you're depending on, how, depending on exactly what you're doing there. Yeah. So it's, so that makes a lot of sense. Well, thank you so much, Adam, for coming on. Is there anything else that you would love to share with the listeners that maybe I didn't ask, or anything that comes to mind?
Yes.
Ooh, yeah.
I'd love to share with you my new book. It's called Unleashed. I just published it. And the reason that this is interesting, it's not a how-to book, Suja. It's not how to make millions in real estate or how to raise money. It is I am asked a lot by investors and by sponsors alike, kind of similar to your questions in a way. Is crowdfunding like a real thing, or is it a gimmick, or like, is it, GoFundMe? Like, how could this apply to commercial real estate? And yet we're helping clients raise hundreds of millions of dollars using crowdfunding techniques. And so I decided to quantify the industry and what's happened. And so that's what this book is. It just walks you through how mainstream crowdfunding has actually become. It's not a sideshow.
Yeah.
Real estate crowdfunding accounted for 25% of all capital formation in the real estate industry in America last year. That's huge. This industry is 6 years old, basically. basically just started, and yet last year 25%. In 3-4 years, you want a prediction, it will dominate. I don't know why people don't use crowdfunding now. It's like baffles me. Why would you try and raise money from people in person when you can advertise or put up a website or post on LinkedIn? So that's that would be what I would encourage people to learn about. Is crowdfunding is mainstream. So learn more about that. It'll give you good opportunities.
Yeah, for sure. I think that's I'm excited to. So in your book, you're just talking about how CrowdStreet started and where it's headed.
Not CrowdStreet, crowdfunding.
Sorry, crowdfunding.
Yes.
How crowdfunding started in real estate and where it's headed, like in general, or?
Yes, it's exactly. I also have a couple, as it happens, CrowdStreet, I also determined are by far the industry leader in crowdfunding, and just so far ahead of anybody else in the industry in terms of crowdfunding platforms. And then there's a couple of sections in here that show you how to find every deal on the market. I figured out how to find every deal on the market all in one place. And so I show you exactly how to do that as well. It's
that's like, that's incredibly impressive, actually. I mean, that's
all in one place. It's
amazing. I mean, I'm definitely, just for that, that's an incredible resource, Adam. I bet somehow you've unlocked the key to that. So
yes, I have unlocked that little hack. It's not really, it's like an unknown, like when you see it, you'll think, oh, of course, but you don't think of it. And so we've kind of hacked it, figured out how to use the data.
Awesome. So is your book out already?
Yeah, you can go to, I'll tell you, just go to gowercrowd.com. That's my website, gowercrowd.com, and click anything red. Basically, if you see anything red, click it. You'll get to that book. It's as easy as that.
Awesome. Yeah, you made it easy for us. Okay, well, I hope everyone that you take some time, check out Adam's book and his amazing resource. I mean, this is such an exciting time for individual retail investors who are, able to access these really high quality deals. It is important to know what you're doing. But yeah, check Adam's book out. Thank you so much, Adam, for coming on the show and sharing such valuable insights and resources with us. We will see you next time.
Great pleasure. Thank you for having me on.